Hey everybody, welcome to another version of Midas Letter RAW. And today I'm coming to you from Times Square in New York City. Thank God the pandemic is finally over. No, I'm kidding. I have a live 4K video feed from Times Square. I am in my studio tent in deepest, darkest Haldimand County, where I am pressing my thumb onto the pulse of the economic universe from this remote location. The marvels of the internet. Utterly spectacular. Anyways, so I am still solo because we have COVID among us. I haven't got it, and Ed doesn't have it, but one of our crew has it, and so we're all sort of isolating with an extra level of diligence while our crew member recovers. My guests today, I have Prad Sekar here. He is the CEO of Skylight Health Group, recently trading on the TSX Venture under symbol SHG. I have Stephen Dunn joining me now, not now, but a little bit later, from US Copper Corp, which was formerly known as Crown Mining Corp. Full disclosure, I have 200,000 shares of this company. I stand to benefit if the stock goes up. I should be deemed and considered conflicted. My third guest is Robert Tessarolo. He's the CEO of NeonMind Biosciences, trading on the CSE under the symbol NEON, another psychedelic company. And then finally, at the end of the show, I'm having my old buddy Bruce Linton is going to join us to talk about his role as the chairman of the Innovation Committee for Above Food Corp. Above Food Corp, obviously, as you can probably discern from the name, is involved in the alternative foods phenomenon that is gripping this planet. Quickly want to disclose and point out that this show is sponsored by Voxter Analytics, trading on the TSX Venture under the symbol VXTR, and in the United States under the symbol ILATF. Voxter Analytics is digitizing the entire real estate transactional ecosystem from end to end, will reduce the time it takes to do a real estate deal from 3 months down to a matter of 3 hours in the best case scenario, and the entire process is automated, digitized on their platform. We refer to it as real estate at the speed of light, and this is one of the most disruptive companies that is going to come along in 2021, and as I say, they're my clients, so I have options, I have shares, I bought shares out of the market. My options are at $1.15. I bought 100,000 shares at 70 cents, so I'm already in the money on those. We'll talk a bit about Voxter a little later, but that's my disclosure for Voxter. And today I'm also going to talk about the cryptocurrency phenomenon, which continues to astound and just exceed all expectations. I am going to reiterate the reasons that I believe that the entire cryptocurrency complex is destined for a complete and total collapse in the not too distant future, I suspect. I'll give you my reasons for that. I know I'm a lone voice in the wilderness on that one. We're going to talk about the commodities. We're going to talk about the effects of quantitative easing on the economy generally, on markets more broadly. And what else? That's pretty much going to take us to the hour with our four guests. So there you have it. Without further ado, let's welcome Prad Sekar, who's the CEO of Skylight Health Group. Good day there, Midas Letter subscribers. I'm joined now by Prad Sekar. He is the CEO of Skylight Health Group, trading on the OTC under symbol SHGFF and in Toronto under symbol SHG. Prad, welcome.
Hey, glad to be here. Thanks.
Prad, why don't we start with an overview? What is the business of Skylight Health Group?
So we're a US-focused primary care healthcare services and technology company. So we operate in the US managed care services industry. So basically in the insurable services market, providing family medical care and primary care to patients, largely reimbursed through insurance payers, both government and commercial. Our business model is really focused on a very aggressive growth by way of acquisition platform where we're able to acquire small to independent sized physician practices, which make up over half of the practices in the US market, bring them onto the Skylight Health platform where we can, of course, look to drive efficiencies pretty significantly through these practices. But really, the value add that we bring to the market is to be able to instill the technology and capabilities to help these physician practices transform to the new reimbursement model that the insurance market is shifting to in the US, which aligns with more of a capitation-based model and a fixed income model. It's a much higher margin revenue business for the primary care industry. It allows us to potentially share in a lot more upside in being able to provide care to patients. And so really transforms both patient care, but also revenue growth anywhere from 500% or more based on this shift. And so we're currently a national platform across multiple states and are growing pretty aggressively through M&A and organic based strategies.
Wow, that's interesting. So is Skylight a profitable company at this point?
So the clinics are certainly profitable. So operationally, our clinics do generate positive EBITDA and positive cash flow from operations. Overall, every acquisition we make continues to add to the overall cash position of the company. I mean, every acquisition generates revenue. They're immediately profitable. And then, of course, with further efficiencies and higher margin revenue growth, we'll see that margin expand significantly as well.
Sure. What is the strategy that you use to acquire new customers?
So largely, I mean, geographically based, because we operate in what's called as traditionally a fee-for-service market, it allows us to be a little bit more exploratory in terms of new markets, as opposed to where a lot of players that play in the already converted landscape have to put more emphasis on density. So fee-for-service allows us to broaden our scope across multiple markets. That way, we're able to put our footprint into more states. Once we're in those states, we focus on regional density. And so through word of mouth, brokerage relationships, corporate development activities, I'd say we've made about 7 acquisitions now in the last 6 months. And just looking at the pipeline itself, I mean, we're pretty much tied up right through the end of this year in terms of deal flow in the pipeline. And I mean, we're talking about a market potential where there's hundreds of thousands of these practices out there. So there's certainly no shortage in terms of opportunities for mergers and acquisition in the space. And that allows us to be really specific and strategic into the type of practices we're looking for.
Sure. In terms of the patient experience, what is better about your model than the existing model?
So what's really kind of driven this healthcare landscape shift, and keep in mind, this is a shift where, so our revenue comes from insurance companies, right? So we get paid by the insurance companies as providing healthcare services to patients. And so where patients go to these insurance companies and pay premiums, they're not seeing any change in terms of our revenue approach with the insurance payers. It stays the same for the patient. So that's one of the benefits of this model. In terms of the insurance companies, they're shifting doctors away from this fee-for-service model into this capitation model where, number one, they're trying to control their costs. And so with physicians focused on volume over quality, it's leading to a lot of downstream costs. But for patients, you kind of experience this yourself. You go in, it's one reason for a visit, that's it. You have to leave, it's 5-10 minutes. So in a capitation model, all that is kind of put to the side. We're not focused on volume, we're focused on quality. So patients get a lot more time with their primary care providers. They get a lot more support in terms of care teams. They get a lot more one-on-one attention. The idea is to say, look, we're here for you, so you don't need to go to the emergency room. You don't have to go to those urgent care visits. And this way, the follow-up care is far better for patients. And I think the overall comprehensive nature of that approach is accentuated much more under the capitation model. And so what Skylight brings is the ability to transform into that better quality of practice. A lot of these independent physicians, they just don't have the time, capability, and capital to make that shift themselves. And so Skylight's almost operating not just as a platform, but as a bridge for the US healthcare industry to shift from what's more of maybe a broken, fragmented system to a much more patient-centric system that's aligned better with reimbursements.
Mm-hmm. Do you have a sort of standard approach towards acquisitions in terms of what you're willing to pay as a multiple of EBITDA, or do you have more of a sort of customized approach to it on a per incident basis?
There's always a little bit of customization with every deal, but we've been able to show discipline in terms of price acquisition. So where we typically price these deals is between 3 to 6 times EBITDA. And now when you look at it relatively, these physician practices that make the conversion to the new capitation model, they're selling right now in market to larger competitors in the space anywhere from 10 to 12 to 13 times EBITDA or more. And there's more valuation compression happening in that space. So where Skylight's playing is this, first of all, bigger greenfield where there's less competition, the prices are much more attractive and favorable. And so as we continue to look at our pipeline that we've closed in the past and what we have today, we're able to stay within that healthy range that allows us to be far more disciplined in use of capital for acquisitions, but also what we expect to see post-acquisition as well.
Interesting. What would you say is the size of your total addressable market, and how much of that addressable market are you planning to go out and get?
So there's different ways to look at this. I mean, first of all, healthcare in the US is a $3+ trillion industry. Right now, primary care used to represent less than 10% of that industry, but it controls over 60% of the costs. Now, if you think about the total addressable market, you might say, well, that's only a $300 billion market. But if you think about the 60% of cost market and in the insurable services shift that we're seeing, physicians are actually getting compensated not just on a fixed monthly membership price per patient, but in a percentage of the savings of that 60% of cost. And so really the addressable market in terms of where we're playing is much higher than the 10% that primary care represents, because we as primary care providers are able to get a percentage of that savings if we can bring it to the insurance company by providing better care to the patients up front. And so from a population size, like I said, there's probably 300,000 to 400,000 independent physician practices that in terms of total addressable market in the US. In terms of revenue size, I mean, we're talking, certainly more than $1 to $2 trillion in terms of opportunity. And really, if you look at the players in the space, and there's certainly more players coming to the market, a lot of them are staying segmented within specific areas of that program only. Say, for example, seniors alone, versus what Skylight's doing is really playing the broad spectrum of patient demographics, all the way from pediatrics through to geriatrics. And so that allows us far more capitalization in that target market.
How do you go about competing for the acquisition of these available primary care practices in this sort of size range? Are there other bigger, better capitalized companies out there that you have to compete with for these acquisitions, or are you kind of in a world of your own at that level?
So a bit of both. I'd say we play under the radar of most of the large players, right? So our sweet spot of acquisitions are 3 to 10 million in revenue. Sometimes we go up 15, 20 is the one we just closed in April. And if you look at the type of acquisitions we're making, because they're not large enough to be attractive to say some of the larger players, I mean, our nearest player in the space that just went public is Privia, and they're a $3 billion plus market cap, right? And the next one up is probably 8 or 10, and then the next one up is 13 or 15. And so if you think about the size of acquisitions these guys need to make, they're substantially larger. So Skylight plays under the radar quite significantly from these larger players. And that's what keeps, and also within a very different space like fee for service. Really, competition is local. We're playing against kind of regional health systems or other local roll-ups. But if I'm a physician selling today, Skylight's a much better partner because we partner with them, we align with them long-term, as opposed to saying, I just want your practice because I want more referrals to my surgical center, or I just want your practice because I'm trying to build a network to then flip into a private equity group. So in terms of the actual care of patients, the longevity of that practice itself, we've always seemed to be overall a better fit for these physicians looking to exit.
Sure. So you're not targeting a flip into a private equity fund for Skylight Health then?
No, I mean, we're very different. I mean, private equity's model, I mean, as successful as it is, I mean, these are not typically operator owned. And so private equity will come in, they'll buy, they'll try and strip, increase EBITDA, and then eventually flip to a larger private equity group. And we've brought now a couple of deals from private equity groups, so we understand sort of some of the challenges that come along with that. But I mean, from the founders down to the operators, we have all had experience personally running medical practices. So we're an operational based group. When we get in there, we actually partner with the doctors and clinical staff. And so from our perspective, our model isn't how do you flip an EBITDA in the next, 2 to 3 years. It's how do you build the biggest business base possible today on a fee-for-service model? When that converts into capitation, you're going to see a tremendous increase in overall economics and patient care. So that's really what we're driving towards.
Wow, that sounds interesting, Prad. We're going to leave it there for now. We'll come back to you soon for an update. Thanks very much for joining me today.
Thanks for having me on.
All right, so sounds like an interesting proposition, a roll-up strategy in the healthcare sector. We've seen that movie before. It has paid off handsomely. It has caused heartbreak and misery. It's done everything in between. We're looking at the chart right now of Skylight Health Group here, trading at $1.55 on the TSX. Looks like it still has a long row to hoe to get to stardom. Prad, Sekar, though, no slouch in the business community, well known for other past successes. And so we look forward to that. Now, I also wanted to talk to you about GMG. Here's the chart on that. And the reason I want to talk about GMG is because this is another one of my genius investments from 2019. I put $200,000 into this company. Average cost 40 cents a share after the rollback, consolidation, forward split, and everything was said and done. The smoke cleared, and here it is trading at $1.37 at the end of the day this Friday, May the 7th. And so again, full disclosure, I'm fully conflicted on this. Isn't it great to have a show you can just talk about your book all day? But hey, you know what? I got to point out that my picks are getting better and better with time. And in fact, this year I'm batting 1,000 here, which is pretty good. Let's see, where's my picture-in-picture on? And there I am. Hi, everybody. There. Now we can look at charts together. Yeah, so Graphene Manufacturing Group. I've got over 400,000 shares of this company, and I will be selling it without further notice on occasion, though I have great expectations for this share price to continue to rise, and so I will not be selling anywhere near my entire position. I can't put a price on the future of this company, but if you didn't see my interview with the CEO Craig Nickel last week, you should check it out, because the exciting thing about Graphene Manufacturing Group is not just graphene, but the fact that they are developing a graphene aluminum ion battery in partnership with the University of Queensland in Australia. And this is a battery that needs neither cobalt nor lithium, and so is much more economic to develop. And so this could theoretically replace the very expensive lithium-ion batteries in time. And so this is one of the reasons why I think Graphene Manufacturing Group has a great future. Enough about my conflicted holdings. Let's talk about lumber, shall we? Here, lumber is at $16.86. It has been going up an average of $100 a day for the last 6 days, I guess. And it is acutely painful to me to be seeing this, because as you may or may not know, I'm in the process of renovating a house built in 1910, and we are consuming large quantities of lumber in the process. Lumber prices are through the roof! And all this while companies like West Fraser Timber report record earnings. So here's the thing with the whole lumber price, and despite the mainstream media portraying it, Bloomberg published an article today where they had the CEO of a home manufacturer on, suggesting that lumber prices were going to stay high for the near future. Now, that's like bringing on an ice cream salesman to predict the future price of ice cream. It's like, obviously he's going to wax bullish on it because he's got to justify selling overpriced homes to underpaid people. And so, of course, you ask a guy who's he's got to close on a overpriced house due to the skyrocketing cost of materials. Of course he's going to say it's going to stay high. Because if he were to opine otherwise, people might say, well, I think I'll wait to buy a home. So you're never going to hear anybody in the industry opine that lumber prices are going to return to earth anytime soon. You need to go look into the banking sector for that to happen. And this is among the reasons why, if we take a look at the US 10-year rate, it's still up at 1.579. And this is because the demand for a premium on this easy money is far in excess of what the Fed's target rate is, because the banks are saying, well, we're not willing to buy treasuries at that price. We need more money. We need better VIG, because people are ratcheting up the risk by buying assets that are overpriced because of the explosion of liquidity in the marketplace. The chairman of I think it was the New York Fed, Jim Williams, said last week that he didn't see quantitative easing having any long-lasting or any effect really whatsoever on markets globally. Like, are you kidding me? $120 billion a month being printed by the Fed, fractionally banked out to 10x that. So call it $12 trillion. It's just insane. The trillions and trillions of dollars that are being pumped into the system are being emulated at the Fed's by the Fed's lead in all of the G7. So there is no place for asset prices to go but up. And this is part and parcel why we are actually, in my opinion, have entered a hyperinflationary phase, which is going to result in a condition that all hyperinflationary phases do, which is a massive market catastrophe of biblical proportions. And this is all part and parcel of, I believe, a strategy by the world's financial elite to create a scenario whereby they can forgive the debt that dominates the balance sheets of all developed countries. They will use this opportunity to roll out a digital central bank currency. They will use that opportunity to outlaw the use of cryptocurrencies that are not government sponsored. That's what I just said. They will outlaw the use of cryptocurrencies because they are not backed by any sovereign entity, and money by its definition in the modern context requires a sovereign backing. The buck stops here. That expression is not made lightly. And yes, I do acknowledge that the central banking system is just as corrupt as anything, but the cryptocurrency system is as corrupt as it gets. Supposedly we were only going to have 21 million Bitcoins. Yes, but Bitcoin has forked 4 times so far. So how many Bitcoins are there? There's over 2,000 cryptocurrencies. And the entire value of the entire cryptocurrency complex is now worth, I believe it's 2.3 trillion, and Apple's worth 2.2 trillion. So this is a bubble of monumental proportions, and I do believe it's going to end in misery. But yeah, so let's looking at the price of gold here. Like, look at that. I mean, gold is also jamming higher here, 1831. And this looks like it could go on forever. Not forever, but this is the counter trade to cryptocurrency, people. If you want to bet against the central bank complex, you buy gold. You can gamble with cryptocurrencies all you want, but gold will not be going. It will not be doing what cryptocurrencies do. So at the risk of sounding like a broken record, I do believe that the cryptocurrency phenomenon is being permitted to proceed so that when the central banks pull the rug out from underneath the cryptocurrency industry by outlawing its use as money, that the investors who are annihilated in that process will be screaming for a regulated cryptocurrency to prevent this from happening again. And guess what that will be? It'll be the U.S. Federal Reserve's digital central bank currency. This is what I believe is happening, and it's going to be probably at least a year before everybody jumps on this bandwagon as the whole thing starts to unravel. But yeah, you heard it here first. See, I do have some value. Anyways, my next guest is a gentleman who is the CEO of a company. He's been a friend of mine for years. Stephen Dunn is going to join us from US Copper Corp, which was formerly Crown Mining Corp. Before we get to that interview, I just want to show you the chart on copper here. And so copper futures touched 474 today. That is just another monumental leap. Look at this chart here. Over the last few months, copper has more than doubled in price. And this is, again, this is part and parcel of the effects of central bank flooding the market with liquidity. All this money has to chase assets The technology complex has had its run. That investors just can't bring themselves to invest any more in these overblown assets. And so now they're pushing commodities prices higher. And this is probably the single most important symptom of a hyperinflationary correction at 12 o'clock high on the horizon. When the commodity prices start to ratchet up in steep inclines in short time frames, this is indicative that there's just too much money. The money is losing value faster than you can say Jack the Bear. And yeah, you want to be buying copper companies. So I own 200,000 shares of US Copper Corp. I paid 12 cents on average for the entire lot. Obviously, I'm sitting on a small fortune there. And so conflicted I am.
Crown Mining, which is now US Copper. What a great name. Right on the Nevada-California border. It was drilled 70 years ago by a big mining company. It's really, no one's looking at that. Well, more people are starting to look at this, but there's a deposit there. There's silver there. There's gold there. You know what? When you start to hear about countries starting to expropriate mining companies from North American entities, you say to yourself, where would you rather have your deposit? Canada, United States, or would you rather have it in Chile or Peru, or some of these jurisdictions that are in Africa that are quite hostile? So this company is sitting here poised, in my mind. It's got a deposit. I mean, we're talking a several $billion-pound deposit of copper, and the price is doubled, and the leverage is so. Anyway, I don't want to sound like I'm promoting if you believe in copper, I think deposits in North America will get recognized and re-rated, and we're seeing that. We have 3 deposits on this property, and one of them, I believe that's called the Moonlight deposit. When copper's at $4, and remember, they've done studies on this already, so we're not making this up. There's a deposit, it's a 43-101, albeit historical. There's a PEA. At $4 copper, one deposit, and this is $4 copper, not $4.70 copper. One deposit has a net present value of $800 million. That's discounted back. A lot of people probably don't know the intricacies of net present value and what it all means, but it basically says, hey, you build a mine and you can sell your copper at $4, and you can do it for what we think the life of the project is. You're going to net back $800 million. That works out to, $7 a share. That's one deposit. What if copper goes to $6? These things, these valuations are exponential. A lot of this stuff just falls to the bottom line. Look, we're seeing some stuff here. Copper is the new oil. So great interview coming up. We've been talking about copper. Copper's hot. We're going to talk to the man himself, Dr. Copper, CEO, US Copper.
G'day there, Midas Letter subscribers. I have a special guest today. Steve Dunn joins me now. He's the CEO of US Copper, trading on the CSE under the symbol USCU. Stephen, how are you doing today?
Pretty good. James, yourself?
I'm doing well as well, thanks. Stephen, first question. Why is it that the commodity price of copper is soaring ever higher week after week, yet the price of U.S. copper is holding steady at 20 cents?
Well, that's actually the $64 question right now, James. Most of the junior deposit companies have not participated like the copper producers have. And I think the big reason is most of the investing community still is not convinced copper prices are going to stay high enough that the takeover cycle will start. So what we're really waiting for is waiting for a copper producer to try to buy one of these junior copper deposits. When that happens, I think all of us will get a much better bid, and we will start participating in this rally. It's been an impressive rally so far.
Yeah, it sure has. So the price of copper is trading today at above 430, and is this the all-time high for the price of copper at this level?
Actually, copper today, this morning, hit 450. And from a historic perspective, we are at basic highs. However, when you adjust prices for inflation, we still have quite a ways to go. Goldman Sachs did an interesting chart about 2 or 3 weeks ago, and they showed, historically speaking, the high in copper prices was back in the 70s. It hit approximately $13,000 a ton, which is around, call it $6 a pound in today's pricing. And back in 2008, it hit around 11,000 a ton, which is approximately $5 in today's pricing. So we still have quite a ways to go in terms of getting to levels that you might consider to be highs.
Wow, fascinating. Okay, so Stephen, tell us about what's going on right now on the ground at your project in California. Is there mining activity or is there exploration activity underway?
Well, we are approximately 2 weeks away from the drills starting to turn. We have a 7-hole drill program planned. We're drilling 2 of our deposits. You might recall we have a 2 billion pound deposit called Moonlight that we did a PEA on. But we have 2 satellite deposits, one Superior and one Engels, that we are drilling 7 holes on this spring. The idea is if we can demonstrate that there is potential high-grade starter pits at these 2 deposits, we can improve the economics on our Moonlight PEA.
I see. That sounds good. So people hear mining in California and they immediately default to thinking, oh, mining never happens in California because it's such an environmentally sensitive population. But that's not the case where you are, is it?
Actually, you're right. In California, there are a number of operating mines. Most of them are on the eastern side. Equinox is the best example. They're a large billion-dollar market cap gold company with 2 producing gold mines down in southeastern California. But the key thing to keep in mind with regard to operating a mine or permitting a mine in California is it is the county that actually takes the lead agency in terms of having a permit granted. What that means is a company like us, when we are ready to propose building a mine, we would go to the county with our applications, and if we can convince them of the merits of building a mine in that county, they then take that application to the state and to the federal level. So you end up with a situation where it's a lot easier to discuss with local politicians and local agencies the merits of building a mine.
Sure. So coming back now to the price of copper versus the price of gold or copper exploration companies, you said that the juniors would start to move when the majors start to make start to buy some of these companies. Why aren't the majors buying junior companies yet?
Well, I think they've started to dust off their files. And the reason I say that is we've always said that a copper price of approximately $3.50 was needed to justify building new mines, to justify the capital expenditure. We've only been above $3.50 for approximately 6 months. So we are now entering a period where it looks like copper prices could sustain the levels that we're at. And why is this? Well, the copper producers have shot themselves in the foot many times in the past by building mines when prices were high. And then sure enough, prices end up falling off and they lose money for years and years. This time, I think they're being more careful. They want to make sure copper prices will be at a new sustainable level. I think we're at a time right now where it looks like that's going to happen. It also looks like demand is actually going to edge up at a higher growth rate than it has in the past. Copper demand historically has grown at approximately 3% per year. That's because of population growth and urbanization. But now, as you're aware, we're going into this energy transition where we're moving away from fossil fuels and we're moving to sustainable energy production, which all requires massive amounts of copper. So with this new demand coming, we're looking at a period where demand could probably double over the next 20 years. And there is just not enough copper supply in the on the books to meet that demand. And that's why these copper producers are now starting to look at where can we build a new mine? Can we make money doing it?
Sure. Okay, so what is driving the sudden copper price appreciation? I mean, the chart on the copper price is so suddenly steep that it's kind of like, well, what happened? What caused copper to start this bull run?
You're right. It is very surprising. Like, we've just gone through a year of the virus beating up the world economy. And yet we had commodity prices end up positioning or having one of the better years that they've had in a decade. And I think the reason for that is inventories were basically given quite a shock. The whole supply chain was disrupted big time last year with the virus. Not only was production cut in many, many places, people couldn't get the supply of copper that they needed. And if you go back to last year, inventories were already at not historically low levels, but they were certainly close. And I think the reason for that is there had been inventory gains going on. What the virus did was it shocked the system. All of a sudden, there wasn't enough inventory. And then China started stockpiling, getting ready for the new boom. They've been fiscally expanding the stimulus in their economy, as the US has and as Europe is. And I think a lot of manufacturers have realized they need to build up inventories to meet this demand that's coming down the pipe.
Mm-hmm. Okay, so is there any sort of contribution to the rising price from the idea that all commodity prices are now increasing as a result of the inflationary pressures caused by quantitative easing at scale?
Certainly looks like it. Every single commodity has a much higher price than approximately a year ago. All you got to do is take a look at lumber. Lumber's up over $1,000 a board foot. It's just amazing what's happened to some of these commodities. Is it inflation? The government would have you believe no, but it's hard to really analyze what's gone on with these prices and not come away with the thought that this massive monetary expansion has something to do with it. Supplies are certainly low in virtually every field. Why is that? Well, we've been underinvesting. We've been underinvesting in copper for a decade, in zinc. We've been underinvesting in virtually every commodity because prices never were or were not high enough over the past decade to justify the expansion. But then you add all this monetary stimulus. What does that do? It's got to go somewhere, and it ends up leading to higher pricing.
Mm-hmm. So to what extent is the revolution in the automotive sector, in that we're now at approximately 7% of the global fleet has been electrified? That leaves a lot of runway to go before even half of the world's automotive fleet is electrified. Is that putting pressure on the price of copper at this time?
It looks like it's starting. And it's important to kind of take a step back and look at the real numbers when you want to take a look at the impact of something like that. What I usually do is I take a step back and I look at total copper demand. And as we've discussed in the past, it's approximately 25 million tons a year. They are estimating that this so-called electric vehicle revolution, which also includes charging stations and new sources of electric power, will increase demand by approximately 6 million tons over the next decade. So 6 million tons on a 25 million ton demand level is substantial, especially when there's no new supply. Now, that's not to say the supply will not end up coming on stream. It will. Higher pricing solves everything. Higher prices will end up making a lot of these copper producers build new mines, and that demand will be met. But we do need higher pricing. But going back to your question, 6 million tons of new demand, it's not happening today. It's starting to happen. So what happens today, maybe there's 200,000-300,000 tons worth of new demand that happens this year. Next year it will be 600,000, 700,000, 800,000 tons of new demand. So incrementally, it will start to impact the copper price. But there's other things going on. It's just not electric vehicles. It's also wind power. It's also, population growth, urbanization. There's all these things that are feeding into copper demand growth. And over time, demand is not going to fall off. It's going to keep increasing, and we need more supply.
Very interesting. It's been suggested in certain mainstream news channels that the major producers all have a backlog of projects that they could activate sooner than buy new companies, and that this backlog of projects that are sort of on hold would be more than enough to meet the current and rising demand for the near and more distant future. What do you say about that?
That is a good argument. I'm quite aware of the projects that are on the books of a lot of these majors. However, the numbers that I do look at, and they're provided by people like Wood Mackenzie and CRU, all show that with demand growth that is expected, mainly coming from this green revolution, we'll have copper demand at a higher level than what the producers can generate in new supply from their current inventory of projects. In other words, they need additional projects to meet this new demand. The other thing that a lot of people aren't aware of, we've got probably 2 million tons of new supply coming on stream over the next 2.5 years. So as an example, Ivanhoe's Kamoa in Africa, Teck's QB2. So these projects are going to bring new supply on. However, there are not a number of new projects that have been started after this new supply comes on stream over the next 2 years. So the producers do need to start to move ahead on building new mines, and they haven't done it yet. I think as I mentioned earlier, I think they've dusted off their files and they are looking, but there have not been any new announcements of brand new huge copper mines. Think about it for a second. Like Kamoa, Ivanhoe's Kamoa is expected to bring on stream 500,000 pounds a year. That's still not enough when you take into account the new demand that's coming down the pipe. Remember what I said, they expect 6 million tons of new demand just from this EV revolution. And Ivanhoe's mine is expected to bring on 500,000 pounds. We need way more, 500,000 tons.
Wow. Okay, well, Stephen, let's leave it there for now. I'm going to come back to you soon for an update, but thanks very much for your time today.
Thank you, James. Have a good day.
So as you can see, all it's going to take is some copper majors to start buying a few copper juniors, and I don't see any reason why U.S. copper would not be at the top of their list with over 4 billion pounds in historical copper reserves. This thing is poised to be eaten up, gobbled alive, but we'll see what happens. You know, it's going to take the copper price maintaining these high levels. The farther and faster it runs, the more that the major copper companies are going to sit on their hands before they start buying, because the farther it runs, the more there's going to be an expectation of a correction to the downside, and copper companies don't want to buy copper companies when copper's at an inflated price. So, but copper juniors like U.S. copper, I think, are extremely attractive at these prices, simply because they have not responded yet to the copper price. That will come, you mark my words. Okay, so we talked about cryptocurrencies till I'm blue in the face. We talked about gold. I think we're just going to go right now to my next interview is with Rob Tessarolo, who's the recently appointed CEO of NeonMind. G'day there, Midas Letter subscribers. My guest today is Rob Tessarolo. He's the CEO of NeonMind Biosciences, Inc., trading on the OTC under the symbol NMDBF and in Canada under the symbol NEON. Rob, welcome.
Hey, good morning. Thanks for having me here today.
You bet. Rob, can we start with an overview? What is the business model of NeonMind Biosciences?
Sure. NeonMind Biosciences is a drug development organization focused on advancing psychedelic substances through the rigorous clinical trials that are required for FDA approval or Health Canada approval as medicines.
Okay, that's interesting. I have a bit of a history with psychedelics, which is why I regard myself as such a well-adjusted and happy individual. But can you tell me specifically what are the treatments that are being explored, and who are they appropriate for?
Sure. So over the last 18 months, I would suspect a lot of the viewers, investors at large, there's been a fairly bright spotlight shone on the psychedelic sector. And what you hear about is a lot of research and development going on, largely focused on what I would call psychiatric indications. So things like ADHD, treatment-resistant depression, suicidal ideation, major depressive disorder, and PTSD. Our organization, NeonMind, is focused on looking at psychedelic substances and how they can affect and support and help with weight management in the obese population. What we know about psychedelic substances is they can have a dramatic effect on the remodeling of how an individual perceives one's self. And there's been there's a growing body of evidence out there that that through psychedelic-assisted psychotherapy, patients come out on the other end of that with a renewed sense of self, an altered state of how they see themselves. And when you start looking at obese patients and the disease, the treatment paradigm, you quickly recognize that psychotherapy and behavioral change therapy, is an important part of helping those patients. And so we're evaluating and we're looking to investigate psilocybin in patients that suffer with obesity.
Sure. The regulatory landscape, most psychedelics still occupy Schedule 1 territory in the regulatory regime. How is that changing to accommodate this business?
Yeah, so I think with respect to the scheduling of these substances, time will tell in terms of the way scheduling will be adapted. But I think importantly, the FDA's got a framework in place that allows for novel compounds, innovative compounds to be granted various special statuses. We've seen psychedelic substances. We've seen psilocybin granted breakthrough designation status, fast track review. We've seen MDMA receive breakthrough status designation in the U.S. And importantly, Spravato or S-ketamine, which is a psychedelic substance, was approved by the FDA almost 2 years ago. So the pathway, the regulatory pathway is in place to submit new drug applications to the FDA to have them evaluate these substances. And we are a believer, NeonMind Biosciences is a believer that the only way to really advance these substances and get psychedelic substances into the mainstream for patients at large is to actually do the clinical trials, demonstrate safety and efficacy, put those files in front of a regulator, and have them approve the medication.
Sure. And so, how far away is it from NeonMind being able to do that?
Yeah, so we believe that within the next 5 years, we will be able to have a new drug application in front of the FDA, and so long as the science supports safety and efficacy, ultimately have psilocybin approved for weight management, in the obese population. It is a long haul. These trials can take an awful lot of time, and they certainly are. But there's a growing body of evidence out there that supports advancing these substances and in making the investments to demonstrate safety and efficacy. We've seen other psychedelic substances advancing rather well or quickly. Even earlier this week, there was a great announcement with respect to some other data that again demonstrates efficacy in a different patient population, but with psychedelic substances. And so, the more evidence that's out there, the growing body of evidence to support safety and efficacy, I think, can help accelerate these patients these substances getting through regulatory frameworks and review.
Sure. So then, is the objective for NeonMind to create ultimately a prescribable product?
Right. So we're evaluating psilocybin in two different programs. We have a lower dose. When you look at psilocybin acts on the 5-HT receptors in the brain, and we know that the 5-HT2A receptors are implicated in the hallucinogenic experiences and the hallucinogenic effects. The 5-HT2C receptors are involved with appetite suppression, and so we're advancing two separate programs. One program is a high dose program, which would be used in conjunction with psychotherapy. So we term that drug enhanced psychotherapy. So we would envision a patient in a specialized setting having a guided experience and psychotherapy and behavior therapy associated with that, and ultimately having a change in their behavior and the behavior patterns. On the other hand, the lower dose program that we're advancing would be more of a traditional pharmacotherapy, where it'd be a drug would be prescribed by a physician, picked up at the pharmacy, and the patient would ultimately take that themselves. And there would be, we anticipate that would be a lower dose, sort of below the not high enough to elicit hallucinogenic experience or hallucinogenic effects.
Mm-hmm. Okay, so how does your business model compare with, say, that of Compass Pathways, who is clearly the sort of, at least financially, the leader in the space?
Yeah, so Compass Pathways, is a very respected company that is well down the road with respect to their drug development. The way I look at Compass Pathways, they had a tremendous research idea with respect to applying psilocybin in the treatment-resistant depression indication, so a psychiatric indication. They've done some early work, they've done some early studies, and I believe they're beginning phase three trials, which is one of the steps that's required. So I look at NeonMind Biosciences. We're 3 or 4 years behind Compass Pathways. We have a great research idea. It's in a very different indication. The patient population is quite in need of new innovative therapies, the obese population. And so when I look at Compass versus NeonMind, we're certainly a startup. We're certainly an organization that is in the early stage. We have preclinical data that demonstrates and supports the efficacy of psilocybin for weight to reduce weight gain. And so we are an early stage company, but going down that same pathway as Compass, which is to say, pursuing rigorous clinical trials with the intention of getting an application in front of the FDA to ultimately have an FDA-approved medicine.
Mm-hmm. So in a best-case scenario, how soon is it till NeonMind becomes a revenue-generating proposition?
Yeah, so revenue generation in the psychedelic sector is not a near term is not measured in the next couple of years. I think that the way we look at all of the programs that are in front of that are out there being developed, likely the earliest approval is 2024, 2025. And as I said earlier on the show, earlier on in the interview, we think within 5 years we could be approved, so 2026. Now that's in the drug development side of things. Our business also focuses on wellness products and advancing, mushroom infused functional foods. And so we have those products that, they don't proceed through the same clinical trials and Health Canada or FDA approvals. So those are on the market, and we market 4 mushroom infused coffees at the moment, and we have the plans to launch dietary supplements in the U.S. In the next 6 months.
Interesting. All right, Rob, that's a great introduction to the company. We're going to leave it there for now. We'll come back to you in a couple of months and see how you're making out. Thanks very much for your time today. All right, here's the chart on NeonMind. Obviously, it has been taking the lumps here. It's pretty cheaply priced. We'll have to see what happens. It's obviously a long timeline before this thing starts to look anything like Compass Pathways. Let's pull up a chart of Compass Pathways. Compass Pathways is the 900-pound gorilla in the psychedelic space. Let's see here. Compass Pathways. CMPS on NASDAQ, trading at $34 a share, over $1 billion market cap, this company. Quite far ahead in the game. Could NeonMind become another Compass Pathways? Well, it's possible. One of the other companies that I've been following quite closely, if you've been watching the show, is MindMed. MindMed, Bruce Linton's the chairman of the company. The CEO is a friend, and it listed on NASDAQ recently. Big sell-off. They did a whole bunch of private placements, and that's where this selling pressure is coming from. But I think this is a contender for becoming the next Compass Pathways now that it's trading on NASDAQ, more so than NeonMind at this point, but we'll have to see. Okay, so my next guest, speaking of Bruce Linton, is Bruce Linton, chairman of the Innovation Committee of Above Food Corp. Bruce is going to tell us why he likes this company so much, and I'll let him do the talking. Here he is. Subscribers, I have a special guest joining me today. Mr. Bruce Linton returns, this time as chairman of the Innovation Committee for a company called Above Food Corp. Bruce, welcome.
James, how are you, man?
I'm great. It's so good to see you. Why don't we start with an overview? Tell me about what is it that Above Food Corp does?
So the simple headline is sort of field to fork. So think of it as if you were talking science talk, it's plant-based proteins. If you're talking to people who actually have a wallet and an appetite, what you're talking about is a company that takes a great deal of care in growing and controlling all of the ingredients that are plant-based. So think of various protein types, growing them under control, having their certification designation, organic or otherwise, and then turning them into ingredients that go into finished products they make. So think of whether or not you wanted to have an unsophisticated thing like a burger, getting a little more interesting, a different kind of pizza, and going all the way to where it becomes quite novel things. So think maybe you could actually make a great shrimp alternative that would be turned into something terrific for, say, a sushi. And so this is a business that's gone from being 3 generations, 65,000 acres of farmland, making plants into seeds that get sold and you never see again. Now they're adding the value above, get it above, just selling the plant seeds.
Wow, that's cool. So then what's the status of this business? It's not a publicly traded company, and is it going to go public? Is there a way for our investors to participate?
Yeah, so everything I get involved with, I have no gain in this unless we become a publicly traded equity. So I have zero income, zero comp, zero equities of any value unless this thing becomes listed or goes through transactions to be bought by a listed company. And I think it's better to be listed than to be bought. So yes, we're aligned on that. It's related to a couple of other companies in the group, and you'd see it in the press release. But really what we're looking at, and the reason I was attracted to them, I did, as I mentioned to you off air, I did a SPAC, special purpose acquisition company on NASDAQ on May 1 last year, and we de-SPAC'd March 31st. And I started off looking at how disruptive could hemp be, what that protein could be, which led us down a number of interesting topics to look at the mung bean, at hemp, at different fibers, 172 companies in total. And what fascinated me was the small percentage of the addressable market that's tackled by really thoughtful plant-based products that are terrific in taste, that are well-researched, that actually have proprietary methods of creation that you'd stand in line to buy. So I got quite excited about how do you put a bunch of these together. So one way that we might play with above is if we put a couple more pieces together, if you were running one of these 700-800 SPACs out there, you would probably come begging to us to say, could you come into our world, as an example of a way we might go public.
That's interesting. So this is a company that's generating revenues, and is it profitable?
It's generating revenues. It's like a lot of these things. It could be profitable if it quit being innovative. So it has real cash flows, real revenues, but it's plowing them back in so that you can have more and more of those above products, so that when we are in retail, we're not selling one thing. We're trying to have a suite or family of products that represent a range of tastes and purpose and different meal types. And so it is, it's being, what I like to think of is, I think you should measure the value of profitability in a company once a year so the company can focus on profitability. If you measure it every month or quarter, people get distracted just trying to be short-termism. And so this one's not short-termism. It's actually building very interesting, making acquisitions already. Got one done, a couple more on the sort of the radar to put together the pieces rapidly to be a highly valued position player in that whole, I'll call it, sustainable table.
Sure. Okay, so what are some examples of the products, and where can we find them?
Well, so you can't get them yet, but examples of things that inspire us. So I'm super excited to be Canadian again. That had fallen away from me for a while. Because you can now buy a great American product here called Just Eggs, J-U-S-T eggs. You know what they're made with? Not eggs. So I still bug Josh about the name, like it's just not eggs, but they taste terrific, and they're made with a mung bean. And what they do is they make this product that looks like a folded egg. So think of frying something that's liquid in a square frying pan and folding it so that it becomes like a napkin, 4 pieces. And then it's cooked, and all you have to do is heat it from the freezer, and you put it in a bagel with avocado, a little bit of jalapeno. I think that tastes better than an egg. And so that kind of product is the inspiration, because it's vegan, it's sustainable, and it's delicious. And it's protected intellectual property produced in a way that's now taking it around the world rapidly. So that's more like an inspiration product.
Wow, that's incredible. Okay, so
did I just make you hungry? Like, do you not wish it was breakfast right now? Because I just described that in the way I think I saw a little drool come out the corner of your mouth, James. I'm not positive, but I think I did.
Yeah, well, Bruce, I've got chickens laying eggs every day here, and a wide variety of them. So I'm going to try these Just Eggs, but they've got a high bar to cross in my universe, because my eggs are generally 15 minutes old, organic and free range. So we'll see, but that's a good test.
And you know what I liked about the Just guys is they actually cheer for your chickens. And when I say that, they're not opposed to eggs per se. They're opposed to the industrialization of hens. So they love eggs coming from your format. What they don't love is the mega middle, which is, let's put 3 or 4 hens in a cage small enough that they can't all get to the food and water at one time, which means they have to keep moving around in the cage so that they actually can eat and drink. That kind of egg they don't like. Your kind of egg they cheer for. And so I like them. And I think you'll find with above, we're pretty oriented to sustain reliable long-term thinking. And that's because Lionel and his family are 3rd generation, 60,000 plus acres of farmland. So they're not trying to do something that says, well, let's blow this up over the next 6 months, but who cares? This is like, you can't get longer term thinking than when you have folks that are, land-based farmers producing for multiple generations from the same platform.
Sure. Is the 4 square folded omelet shape sort of indicative of the ambition of that company, where, you know, that's pretty much synonymous with every breakfast sandwich from all of the main fast food suppliers?
Yeah. Yeah, so you know you're starting to see them show up in smaller places. I wouldn't be surprised if they show up in bigger places. But what they also they've been in the news a little bit, and this is, you know, just as a, think of it as ambition. We like what they thought about. You could go to Singapore about 2, 3, 4 months ago, and you could actually try chicken product that they had produced without chickens, but it was actually cell based. So these guys are super ambitious, very thoughtful. Like, I really like them. You know, you got to pick somebody as your sort of way out there star. And so I put just as that. But in the case of above, what we have that's the biggest advantage is we control the entire supply chain of our ingredients. So now if you have great ingredients that you control and put together then great research with great recipes, you should end up with something that's substantially more marketable and better and different. And so that's one of the things I liked about the group, was the actual chain of custody all the way up.
Interesting. All right. So then, Bruce, what's the competitive landscape in this field right now? It seems to me that there's a lot of new non-traditional food types coming to market. There's all kinds of, I mean, starting with Beyond Meat, obviously, but now we've got alternative eggs. There's a huge range of alternatives to milk products. So what's the competitive landscape? Is it going to be something that is so widely accepted that everybody's going to trade in their steak for an alternative?
Well, I think there's room for a bunch more yet, and the reason I say that is that you know, you have Beyond Meats, which has been a very visible player. They've had some successes and failures, but generally highly regarded. But they're still not tapping into a number of the ingredients that we produce in Canada in meaningful ways, or could. So, for example, one of the bias I have towards is hemp protein. Now, hemp protein is way more bioavailable. The plant is a way more eco-sustainable than any other of the field crops. Like, it brings in more CO2 than any other field crop. So think of it as those offset benefits. And it's not been used. If you went and said, well, I really want to see an advanced hemp product, we had Manitoba Harvest in Canada. If you wanted, like, the advancements were, do you want the hemp seed or do you want the hemp seed ground up? Oh, how did you possibly come up with the idea of grinding it up? That's unbelievably genius. So the opportunity to still say those are subordinated ingredients and what do I put them into? And so, like, I see all kinds of space where if you said, do you think like the Japanese market would be receptive to something that had, or the Chinese market, for the inputs produced in Canada and put together in a format that is a competitive product to a domestic product, which they don't have certainty of quality, cleanliness, absence of, I'll call it whatever, chemicals. If we can make something that's branded as Canada, fits to those markets. So maybe you have a terrific, I mentioned shrimp, made a hemp version of shrimp, super tasty. So, that's not available yet. And so I think what we have is the first step with these, in that there's now aisles in grocery stores and freezers in grocery stores, which actually have meaningful traffic that have plant-based products. That traffic will increase as the variety and quality of the products increase. That's what we're doing. And so I'm optimistic it's a good start. It's for sure not done.
Wow. Sounds fantastic, Bruce. We're going to leave it there for now. I thank you very much for your time today. We'll come back to you soon and see how you're doing. Thanks for joining me today.